Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen and euro dollar. So the US dollar this week has done absolutely nothing yet again. And to be quite honest, the weekly chart again shows you multiple high tests as usual. Now this week got a little doji there, / little tiny bullish candle. That really isn't nothing at all to worry about if you're short the dollar at the moment. If you're long the dollar, it doesn't really show much interest either. So the dollar's in no man's land at the moment. It's not doing nothing at all. And when we come down to the daily chart, we can still see that this daily 50 EMA and upward sloping trend line is capping price. We did come down towards it, had a bullish engulfing candle off the trend line, but when we look at other dollar pairs, that kind of bullish engulfing candle is done on low volume by looks of it. So we've still got this like double top pattern at the top here, and we're still waiting for it to break down. When you come down to the lower time frames on the 4-hour chart, we can definitely see already this upward sloping trend line here does support price for now, but we've got to break above the 90 this high here so we can actually prove that we are actually breaking out to the upside. And so far that high is made of a double top / triple top pattern there. So I'm just wary that, like, you know, if you want to buy now, it's kind of a bit awkward, it is. And yet if you want to sell at the same time, it's also a bit awkward. So we'll show you what that looks like now across the board with the dollar pairs. So Aussie dollar again has done nothing this week whatsoever. It's just, again, like I said, it's ranged now for a little bit more. On the intraday chart there is a clear range which we'll go through in a minute, but what I would like to point out to you is that this bearish engulfing candle of the daily 50 EMA is done with low volume. So for me, the low volume itself doesn't actually support the bearish engulfing candle, which means to me it looks like the market makers were trapping people to go short Aussie dollar because it's gone up and just kissed the daily 50 EMA. And I think you'll find people will aim for the lows, but I don't think it will get there, to be quite honest. Now when we look at the intraday chart for the Aussie dollar, you can see we've got this well, I've got a level at 736 I have, which has supported price multiple times. But then if you go down to the 1-hour chart, there we are. We've got this, you can actually see it quite clearly, where 743 at the top of the range, and we've got this blue box at the bottom. So the blue box at the bottom just highlights exactly the key area to buy in. And I've set this idea here because if we do come back down into the blue box, you should just set an order here near the lows here near the bottom, put your stop below the box and below these lows here, so you know it's safe. And you can target just the top of the range for a 2.3% trade. That's the only real trade I would be interested in. Now remember that when we do this, the daily looks a mess anyway. So there is no decision in or general direction. Again, we look at the higher time frame, we're just littered with dojis again. So the market is not looking to go any lower at the moment. If it does, we have to look at volume to confirm whether the move is actually valid or not. But like I said, for the moment, the interest in selling Aussie dollar is just not there. It keeps bouncing back, and if we look at the lower time frames, you could say these lows here are getting higher now. So you could see there is some pressure there. But like I said, unless this breaks and retests the 743 area, this is not actually going to be a bullish trade, a medium to long term bullish trade. So it breaks out there, comes back there. That'll look fantastic, don't get me wrong, but then you've got a double top pattern. So if it comes up to there and then pulls back down to here, for example, guys, the problem you have there is that you're too close to the 75 and looks like it just never made it. So be careful if that does happen, because I think you'll get trapped, as in here you see it happened already. So this is the problem you have with this idea, and that's the trap you're going to have to try to avoid. Like I said, the safest trade is if it comes down here, just put an order in here at 7335, 7330, anything in this area like that you could do. You do that. If you want to be really greedy, you could do something like this and hope for the best. Do something like that. That would be a really worthwhile trade if it does that. You've got 11-to-1 ratio there for a 10 pip stop. But like I said though, that's going to take some time to come down there. So the euro dollar is almost the same as the Aussie dollar, but there's a little bit more structure to it. So again, the weekly chart shows you multiple dojis testing the neckline of 1.16 pretty much. The daily again shows you exactly the same volume as well as the Aussie dollar. The only thing you have to remember though, every rejection of daily 50 MA has been low volume, so the move has never really done anything, and the rejections at the bottom at 1.6, 1.16, 1.157 have been higher volume. So notice how these rejections here at the bottom are always low volumes. It means the rejection of the daily 50 MA is not actually valid. It just shows you the market makers are pushing price around a bit. We got another bearish engulfing candle, of which was smaller volume than the one that went up. So like I said, just be careful with this one. It's going to trap you in. But on the lower time frame, we can actually find a little bit more structure to this trade, and I will show you where that would be. So we can link these lows together now, we can, and the thing on these lows I like to point out is the volume as well. So every point we've come to test this upward sloping trend line would be at higher volume. So higher volume on the first one, higher volume on the second one there, higher volume on the third one there, and higher volume for the day at least anyway on the fourth one there. So this is a 4-touch trend line. It's completely valid. If price does come down to test it, I would actually take another trade of this, no problem at all. We'll insert this into the 1 hour chart now, Will, and we can take a look at what we've got here, and you can see now already. So trade here, I did look at buying here, it didn't go my way. I did get out for a little bit of profit, so I'm quite happy with that one as well. So it's not really too significant. I could see here though, if you look here guys, the move, it just did not want to do anything, and this bearish engulfing candle here for the start of the day at 7 in the morning had actually picked up in volume. So I got out at the end of this candle. I could see that the trend line break to the upside was not sustained, and the volume wasn't really there. Look at the area here, low volume, super low volume. So I just jumped out. It wasn't the greatest trade in the world, and so we're just sitting there at the moment. Trade here is not so bad. If you want to put a trade in now, for example, this would be quite valid. You do that, put your stop there. You could easily aim for the downward sloping trend line, you could, or if you feel that like there's going to be scope to at least 1.12 for example, you could do a trade like this. I'm just giving an example, a 7% trade there. That's an absolute valid trade there. If you're expecting it to break out to the upside, your stop's below the trend line, which is very safe. You can put your stop below there actually, in all fairness. So obviously you got the link there. We can just we'll lower the trend line down a little bit just to see what the what's the worst case scenario. That's your worst case scenario. There you go. That's your absolute worst case scenario if you draw the trend line that way. But for me personally, I do feel it'd be like that, and I do feel you can do a stop like that now. It'd be quite nice. That's what I'd be looking for if you feel that the medium term for the summer for the dollar is to get weaker. Then euro dollar bullish from this example would be quite nice. A nice triangle forming there as well, so you can actually say you got something happening there. So yeah, you've got a lot of scope on that idea you have. So pound yen's another trade which I don't particularly like at the moment. I did say to you I didn't think it was the greatest in the world because when it moved up and then moved back down again, I did say the problem you've got is, well, it had to break the daily 50 MA, it had to break these zones. It's done that. Now you're gliding down slowly and slowly now. Personally myself, an area touch in this blue area here of 144.5 to 144. That is what I think would be ideal. And if you zoom back out, you can see along here these two little lines I've drawn in. It's definitely a zone there. So buying off of this area here somewhere should give you a good probability of winning at the moment. So that I like there. The only problem is though is that I know a lot of people go, oh no, we can go long, we can go short, this, that and the other, and this is going to trap people out. And let me explain to you why on this one. So when the daily looks like this, it's moved down significantly, and then it's just kind of done nothing whatsoever. And when you come down to the lower time frames of the 4 hour chart shows this nicely. This would be people saying the bottom of the run as such. So the market dropped significantly, small pullback, dropped significantly again, and the same small pullback, and dropped a little bit, chopped around, and it moved back up quite a lot, considering considering these ones were small pullbacks. That's a much bigger pullback. Messed around, and the drop here is a very weak drop. It didn't break the lows as such, and then for 20 hours did nothing whatsoever. So for me personally, a lot of people say, oh, that's a good sign for a bullish trade now, you know, it should go up. And you're right, if you're going to trade the medium term time frames, that should go up. But the problem is, though, is that the daily doesn't support that. And likewise, you won't want to go short because you're in this run where it's getting exhausted. Like I said, big drop, small pullback, slightly smaller drop, same pullback, much smaller drop, and then the pullback is much bigger. This tells me that the steam of the bearish trend is also going to be exhausted. So what you're going to do is now is it'll move back up, trap a few traders in who think it's long now, and then it will drop again down to the 144.5 area, which is these lows here. So I'm just going to draw that line in now for you guys here. So on this one here, I don't like it until we come down to test the 144.5, until the daily gives a signal. So if you see here, it moved down, then you got this nice little doji here, bullish engulfing candle here, something like that. Maybe not much of a huge bullish engulfing candle, but as you get the idea though, you want to test this area here. As we come down, test the area, move back up, and you can see in the past it come down, test the area, move back up a little bit, and again here come up and drop down. That's what you're looking for really on the daily perspective. When the daily gives you this signal here to come down to test, look for the intraday for the trend change, and you will have a higher probability chance of the trade heading in that direction there. And then you want to get out before 147.5, and you could then say there's a little range being played out at the moment here. Okay guys, any questions, give us a shout. If not, happy trading and speak to you soon. Take care.